Check on how the crude prices are shaping up today. The Brent has slid towards 114 a barrel as fears over supply disruption in the Middle East eased slightly after Britain said it will not join any military action against Syria. The Brent on your screens at 115 at this point in time. We have seen 0.1% of gain coming in for that one. The NYMEX in the meanwhile also holding flat to slightly in the green on your screens. The gold prices in the meanwhile have seen a decline coming in, falling below the psychological important $1,400 per ounce mark after immediate US strike on Syria has faded and strong dollar has rekindled fears of an imminent scale back of Federal Reserve stimulus measures. But the metal is headed for a second straight monthly gain for this one as well. You have seen some short covering that had pushed the prices higher. On your screens, a percentage point of a decline coming in. In the Indian markets as well, you have seen 2 to 3% of a cut coming in for crude prices and gold and silver as well. Let's take it across to Gavin Wendt of Mine Live then. And Gavin, hi, welcome to the show. Let's start with the base metal prices, which have seen a strong run-up in the current month. Do you see it as bargain buying as the sector was oversold, or do you see some actual demand growth story building up?
Well, I believe it's a combination of both. Certainly as far as China is concerned, China is the biggest consumer of commodities in the world, and particularly in the base metal space. They are price movers as a result of their buying potential. So traditionally they are very good at buying when prices are low and equally pulling back from the market when prices are high. So, you know, the Chinese are very much aware of their status as price movers, and as a result, you know, we've seen prices rebounding over recent weeks as a result of greater Chinese buying. There's also been the issue of, I guess, improved economic outlook around the world. We've seen better numbers coming out of China. We've also seen better numbers coming out of Europe, particularly with respect to the German economy over recent weeks. So that is also having an impact, and base metals are key components of economic growth, and it seems as though the world is becoming a little bit more comfortable about the economic outlook.
And also, what's your sense coming in for the other metals like steel and iron ore prices also have seen a rebound from this year lows? Do you see a further steam in them?
It's a really interesting one because there are a lot of pessimists out there in the market that were talking down the steel sector and the iron ore business, predicting lower levels of steel production and falling steel prices. You know, we can't look at one set of numbers and deduce a trend, but certainly I think what it does reinforce is that China's economic growth is still very stable. The steel industry is a major component of their economy. They're implementing their most recent 5-year plan, and I think the Chinese economy is moving along very nicely, and as a result of that, demand for iron ore is still very, very strong. BHP and Rio Tinto in Australia and Fortescue are selling as much iron ore as they can produce, and that's reflected in steel production numbers worldwide, not only in China but also recovering in Europe. So I think that paints a very positive outlook as far as the world economy is concerned.
Also, the high commodity prices for most Asian economies, including India, is not a good news. How much of an upside do you expect from here in case of the crude oil prices?
Well, certainly for oil producers, the situation surrounding the oil price has been a major positive. You know, prices have been certainly robust. Of course, on the flip side of that, it's not so good for consumers and industrial users. But the oil price has shown tremendous resilience over the last 6 months, and I believe that's going to continue. We're entering a period in the run-up to the Northern Hemisphere winter period where oil demand typically rises, and so I believe we're going to see prices in excess of $110 per barrel. On top of that, you've also got ongoing political instability in the Middle East, and I think you're going to see a greater risk premium factored into the oil price. So I think oil prices are going to show tremendous resilience during the second half of this year.
Gavin, before we let you go, one word on the gold prices as well, which are trading just about that 11-week highs on sentiment that Fed perhaps may taper or not taper QE soon. I mean, that is something that has been keeping the markets quite jittery. What's your view on the road ahead for this sector?
Well, I don't see the Fed easing off on or tapering any time soon. I see them continuing with their bond buying program. I don't have a lot of confidence in the US economic recovery as it currently stands. I think when you've got a situation where you're spending billions, even trillions of dollars in stimulus, it's going to generate some economic impact, and that's what we've seen in the US. But how sustainable is that growth? I think there's big question marks hanging over the sustainability of it. And what are the unintended consequences? We're seeing a tremendous expansion of the money supply, and that has to have a big impact eventually on inflation and interest rates in the US economy. We're already seeing that interest rates are starting to have a negative impact on the housing sector in the US. So my view on gold is very bullish. It wouldn't surprise me at all to see the price climbing back above $1,500 over the coming weeks and even pushing higher. And of course there's a focus on the supply side now. With a low gold price environment, it puts a lot of pressure on margins as far as gold producers are concerned. So I think we're going to see higher prices.
All right, Gavin, we'll let you go at that. So some strength in case of crude and the gold prices may continue going forward as well. But let's also get in Kishore Narne, who joins us from Motilal Oswal. Also joining us is Vijay Bambani from BSPL India. Kishore, hi, let's start with you first. And what's your sense coming in for the gold and silver prices? The latest moves, the moves in this week, of course, has been the play of Indian rupee. But if we get back to fundamentals, if we talk about the next week, where do you see the commodity?
We are looking at gold slipping back to somewhere close to 1340, 1350 kind of levels on global markets as we go ahead towards September, and the expectations of Fed coming out on QE3 will be much higher than what it used to be. But though the macroeconomic data numbers which are coming out of US are a little discouraging as far as the economy is concerned, but I think still there's a good amount of chance that at least the quantum of money printing will reduce. So that would keep the fundamental view of gold in dollar terms especially bearish. But coming to the domestic markets, obviously as you mentioned, it's a play of rupee more or less, and also rupee has been overshot its fundamentals as well as technicals as well. So I think that natural correction is coming up now. But I'm not seeing a major appreciation of rupee even from these levels. So probably we could be going back to around 65.5, 65 kind of levels and sustain somewhere close to that. So at this point of time, though both considering international gold weakness and the rupee strength, we could be selling gold at around 32,700, 800 kind of levels. A target of 32,550 intraday should work fine, and 33,265 should be the stop loss for that.
Vijay, what's your sense now coming in for the silver prices? Because as we have been talking about, the declines have been similar to the kind of gains that we saw into this space.
Absolutely right, Manisha. Twin factors which are acting as a curb on any further rally in silver. Number one, you have an INR which is showing signs of stability with some amount of even strength in the absolute near term. Secondly, the threat of any military strike on Syria in the absolute near term seems to have gone into the background. So any kind of panic buying, any kind of defensive buying is now eased off, and you're seeing silver coming down as sharply as it went up. And talking about levels, I would not really be surprised to see silver come down to 52,000 levels, or maybe even somewhat lower than 52,000. I think at that point in time, a serious-minded investor with some amount of patience can start nibbling into the delivery segment. Since November 2012, I've been off the futures space, and I would advocate staying off the futures because the cost of carry in futures is significantly higher. I think it's 2x of your bank FD return. So it doesn't really make sense to keep money in a bank FD and pay 18% or plus on annual futures rollover. So I think 52,000 odd levels, provided the price, the volume and the open interest start warranting such an action, maybe you should start getting into, allocate 10% of further money that you have earmarked for silver into delivery-based buying.
Kishore, what's your sense now coming in for the crude prices? Because this space really has been the major mover, all-time highs in the Indian markets for crude prices, but we seem to have given that kind of gain up as well in the market today.
Yeah, again, in international markets, again, the Syria issue cooling off takes off some risk premium out of the prices, and globally also prices should be turning weak right now. And with the rupee appreciation, we have some more downside in domestic markets. So at this point of time, I would suggest to sell crude around 7,260 to 280 kind of levels. Stop loss of 7,335 should be working for the day or two, and 7,140 could be a potential downside targets for short term.
Vijay, what's your sense coming in for the base metal prices right now? Because the copper prices, while they have come off their 500 kind of highs, would you see further decline coming in? And what kind of a range would you want to really work copper now for next week?
Manisha, I talked about how the weakness in the rupee has had resulted in unnecessary exuberance in the prices of base metals, which had rallied to a point where they were overbought. Yesterday we talked about how 466 or 468 levels made a lot more sense for any high-risk trader to come out there and start getting his toes wet on the long side. I would still hold that view. I think 466 to 468 is a level which is a fair price for a high-risk trader to start contemplating long positions. Having bought at those levels, if at all you do get to buy at that level, I think 454 odd levels would be a stop loss. And my guess is copper will attempt to go back to the 480, 82 levels where it will get sold into all over again.
It has been really a screen of red across agro commodities. You have seen profit taking coming in for the edible oil space. Remember that one was on a tear. We have seen upper circuits coming in for that one for a couple of sessions. But today is the day when you have seen profit taking coming in, 2% down on soybean. That's the ditto kind of decline that you have coming in for soy, oil, castor seed as well. The chana prices also have continued to decline for a third or fourth straight day today. You also have declines coming in for wheat prices, sugar prices, all of that actually trading in the red on your screens. That's how it shuts shop really. Kishore, what's your sense now coming in for the chana prices? Because while we did see some gains coming in for most of August, we seem to be ending the month slightly on the lower side.
But I think still there is some more strength left in, I believe in China especially, probably 3180, 3200 should be possible in short term. So I still will be buying China with a stop loss of 3000 and looking for targets close to 3200.
Vijay, how would you look at the soybean prices? Would you say that it seems to be taking a breather right now?
Absolutely, Manish. Yesterday we talked about how edible oils were overextended, partly thanks to the USD INR, partly because some amount of price activity on the upside was seen in the international markets. I think rationality is now coming back. If you talk about crude palm oil, I think the September futures, which have ended today at 550 levels, I think should go down by another 2% before sanity returns here. Ditto with soya oil, I think another percent and a half declines are in order here.
Kishore, what's your sense coming in for soybean prices? Because we've seen nearly 2% of a decline for that one.
I think yes, probably we're seeing today kind of a price correction, but I still believe that we should not be dipping below the 3400 kind of a mark. So probably 3390 should be used as a stop loss to buy, and short-term targets of 3520, 3530 should be used. But overall, I think a range-bound activity can be seen if you're looking at a short to medium-term kind of a perspective.
All right, so even as it has been a slightly weaker day for agro commodities, it still is buy calls coming in for that space. Kishore, thank you so much for joining us with your strategies.